Alright guys, how's it going? Today I'm going to show you my trading strategy. I'm just going to go over it quite quickly and just explain to you guys like how I trade basically, how I do it and where the whole idea for my trading came from. So this is the chart, obviously, you can tell. Right, so first thing we need to do when we are in here is mark out the 9 a.m. high and 9 a.m. low. Alright, so we have finished our 9 a.m. high, 9 a.m. low, or just the entire 9 a.m. candle, right? So how do you figure out what's the high and what's the low? Is it from here? No. Is it from here? No. It's from the highest point that price went in that hour zone, that hour range, right? So that's the highest point that price went within that hour range. This is the lowest point here. So we mark out our highest and lowest point that price went within the 9 a.m. zone, okay? Right. Market opens 9:30, right? Right. So we've marked out our 9 a.m. high, 9 a.m. low. So that's the highest the price went within that hourly range. And that's the lowest that it went in an hourly range. So kind of here, so from this down candle here to this candle here is an entire hour. Basically, that's all you need to know. Mark out the high and low, which we've just done. Right, and then we wait for the 10 a.m. zone, which is the silver bullet strategy, or the golden bullet strategy, as I like to call it, because it just works so well. Very, very simple to use, very, very easy. You can't really go wrong with it. It's not hard. So we are looking for a trade entry in between 10 a.m. and 11 a.m. If there isn't a trade entry between these two, then we don't trade that day. Very simple. So we push into 10 a.m. It hasn't swept either the high or the low of the 9 a.m. high or low. Right, we have just had a stop right here on the 9 a.m. low. You can see comes down, price pushes down, takes out potential orders that are resting underneath this low here. So there are potential orders underneath this low here. Price came down, took out these orders. Right, now what we're looking for? We are looking for a market structure shift, change of character, change in state of delivery, depends on how you want to say it. It's all the same thing. Basically, it's where price goes from either bearish to bullish or bullish to bearish. Very simple, very easy. I will do full videos in the future talking about like each individual one, what all these are, what liquidity sweeps are, what change of structure is, what fair value gaps are, everything. I'll do like a full like breakdown of everything. This is just like a starting sort of thing where I can show my strategy. Right, so we've had this liquidity sweep here. This here is the liquidity sweep, right? Now we want price, very simply, to change the state of delivery. That's all we want. That's all we're waiting for. We don't do anything until that happens. And we keep going. All right, there we go. Boom. We've had a change of the state of delivery. Perfect. Good thing is as well, is that we actually have two fair value gaps right here, which is the next thing that we're looking for. We are looking for fair value gaps or order blocks to get filled. I usually go with fair value gaps just because, well, I'm like the fair value gap king. I love fair value gaps. My favorite thing ever made. Right, so we want price to push down into either of these two, respect them, and then continue higher with our take profit set at this 9 a.m. high, okay? So if price broke above the 9 a.m. high, we would look to short. If price broke below, like it has the 9 a.m. low, we would look to long. Very simple. Right, so we wait for price to come back into one. So we still haven't had anything, 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 still, oh, we're in one, we're still in it. Ooh, do I take that? That's another fair value gap there. Right, so when you look at it, you've got to make sure that the risk to reward is like valuable for you. So this would be where I would enter where price currently is, which is here. So if I went here, then had my stop loss there. It's a very small trade. I would only get 1 to 6 risk to reward, or 1 to 6.7. I don't take anything less than a 1 to 2. Okay, so I'm not going to take that one. So we wait for price to keep going, keep going, keep going. Price has broken out of that fair value gap. That makes that an inverse fair value gap, which is a sign that it might come back down. Right, price keeps coming down, pushing up now into that inverse fair value gap, uses it as a resistance, so it won't go any higher, which is good. It then pushes back down into our fair value gap. We're still in our fair value gap. We're still in it. Still in it. Right. We might be pushing out now. Nope, back in it. Right. We have pushed into that fair value gap. It has disrespected that fair value gap and that fair value gap. As you can see, we pushed into this fair value gap here. Price did push out of it, but it didn't close in it. That is the most important thing. Price pushed into it, didn't close, and then continues to move higher. We've had a big jump from this fair value gap, which is good. So what we will do is I'll just do a random amount. Let's just do 10. There we go. We've closed the candle. It's good. I will now buy. Right. I will also go long from here with my stop loss just underneath the fair value gap, and then my take profit at the opposing liquidity side, which is the 9 a.m. high. I will also then move my standard take profit to the top of the zone, and my stop loss will be set, and then we will just let this run and see what happens. There we go. As you can see, full take profit was hit. So if we go back over it again, so you guys understand, we've got the 9 a.m. high, we've got the 9 a.m. low. Very simple. First thing you do, mark out the highest point in the 9 a.m. and the lowest point of 9 a.m. Okay? So, how do you do that? Right, so you go on the 1 hour time frame. So you've got the 9 a.m. candle here. You see, 9 a.m. So you've got the highest point and lowest point. Just put that. Nice and easy. Then we scale down to either the 5 minute or the 1 minute. Not really too important which one. It's kind of just whatever your strategy goes with. I prefer the 1 minute just because it's more like sweet for entries and things. You can see when we came to the 10 a.m. mark, we kind of was consolidating for like not a lot of time, but we didn't really move anywhere. Then we came down, took out the 9 a.m. low. Price then pushed up quite aggressively. We then had the change of structure, which is here. This is the change of structure here. So we've got this high. We then pushed above this high and closed above it. That is the most important bit. Make sure you close above the change, the previous high, to make a change of structure. Brilliant. That's 2 of it done. So we've taken out liquidity we've had a change of character. Brilliant. There was multiple fair value gaps that were formed. There was one here. There was one here. And this one here, right? So during this trade setup, we pushed into this fair value gap, respected it, but we didn't get a strong respect from it. There wasn't a strong move out of it, which is always a good sign. So yeah, it came in, but it pushed out, but not very strong reaction to it. So not really great. And again, if you remember, when we went on it, and you went long on it, and you set your stop loss, you get a 1 to 1.6 risk to reward ratio, which is, well, rubbish basically. It's absolute crap in a sense. I don't look for anything less than a 1 to 2, which my trade here was a 1 to 2.44. 1 to 2. Brilliant. Perfect. Price ended up invalidating this gap, inversing this fair value gap. It then came down, invalidated this fair value gap as well. It then pushed into this fair value gap down here at the bottom. It pushed up off it. It had a strong reaction to the fair value gap, and then I entered, obviously. Set my stop loss just below the fair value gap. Obviously it could push the bottom of the fair value gap and still be valid, so it's always a good idea to set it just below it. Either you would do the bottom of a fair value gap or the next low or high if you were going the opposite direction. Sorry guys, I've got a cold, so you have to excuse me today. I then entered, price then pushed higher, hit my TP, so overall it was a pretty good trade. But yeah, this is basically how every day goes. You might have the odd trade where maybe you might not do that well, or obviously with this strategy I get like a 70 to 80% win rate, which is very good. You also will get days where you don't trade, so you don't have to take a trade if you don't want to, or if your position or your trade doesn't show itself. Don't stress over it, because there's always tomorrow. Like, I've had weeks, like maybe 2 weeks in a row, where I haven't taken a trade. It's not really the end of the world. Just relax, chill out. Another trade will show itself. So you just kind of have to be patient with this one, because obviously you've got a whole hour where you're just sat there trading. The main reason why I like this trading strategy is there's a lot of people that sit on the charts all day, like all day, whereas with this strategy there's like specific times where you'd be on the charts, so like it just helps make your day more scheduled and things. And it's just easier in a sense. There's a lot of people that overcomplicate trading. You don't have to overcomplicate it. I mean, some people will look at this and think this is complicated, which in a sense, yes it is. I'm not gonna lie. It like, for a beginner, this is very complicated, because obviously we're talking about fair value gaps, and we're talking about change of characters and liquidity sweeps, which are all, well, I wouldn't say basic, but like very beginner stuff. But you could add other things into it, like order blocks and things, but I don't want to confuse you guys too much. So maybe in another couple of videos I'll explain what a liquidity sweep is, what a fair value gap is, market structure shift and things, so you guys can get a full breakdown. But yeah, this is my strategy revealed, if you can say it like that. I hope you guys enjoyed the video. Yeah, it's great. Make sure you like and subscribe. There'll be more videos on its way. Yeah, take care. Bye-bye.